What's going on, people? I hope you've all had a great week. So in this video, we're going to take a look into my process, into what I would do prior to actually starting a session. The reason I thought about making this video is because the Forex market has been a little bit slow recently. It's been a little bit lethargic. There hasn't been too many setups. Structure looks a little bit shady. And when the setups do come around, they aren't there for very long. You have to be very, very quick on your toes to actually get into them. Now, it's only so long that this can actually last. So, the Forex markets will come back to normal again. They will be providing consistent setups. Once again, don't worry, they will come. All you have to do right now is you can either take a break, or you can just be consistently studying the market and just kind of back testing, making case studies and understanding what the market is actually doing right now. So when it does come back to normal and when there is positions available, then you are absolutely primed and ready to be able to get into the market and absolutely make the most out of it. So I just wanted to start off with kind of what my morning looks like. I wake up, I pretty much get straight into my workout. Then I sit down and read whichever book I'm reading for about 45 minutes, just so I can get my headspace into the right area, just so I can be focused. Then I'll come inside and have a shower and I'll freshen myself up. And then I'm typically going out for some food, for some breakfast or for some lunch. And then I'm coming back and I'm doing my process for exactly what I do every single day prior to a session. So with that out the way, let's go over to the computer and start looking at my pre-session process. So the first process that I always go through whenever I'm getting ready for a session is I will come onto Forex Factory. Now the main things that I'm really looking for on Forex Factory are orange news and red news, and also the gray boxes, which typically indicate bank holidays. If it's a bank holiday, then I can sometimes anticipate that potentially we might get a slow day and there might not be too much of a move. The orange boxes represent medium impact news, and the red boxes, the orange boxes represent medium impact news, and the red boxes indicate high impact news. Now for me personally, I'm not interested in the fundamental news or the fundamental release of the news. All I'm really worried about is that there is going to be volume in the market when I'm looking to trade. Now, as we can see here on the economic calendar, on Monday, all we really have is a US bank holiday, which potentially indicates to me that there is not going to be too much volume in the market. Now, don't get me wrong, there are still moves that can be taken on a bank holiday. There can be some really, really nice moves that move actually quite a lot. But as I said earlier, because the Forex market is not being too great at the moment, I'm personally sticking to any day that has medium or high impact news, because this then indicates to me that there will be volume in the market. I also have a few news events which I do try and avoid to trade prior to the news event release coming out, which I'm sure you can work out for yourself. They're basically just really, really high impact news events. One of those being non-farm payroll, and another one also being FOMC. Now, if I'm already in a trade before one of these, then I will be a little bit careful. Now on FTMO, obviously I can't trade these news events. So if I'm in a trade on my FTMO account, then I will close that out just prior to the news event, just because I don't want to be stopped out and ultimately lose the account. I'm sure many of you, whether you're a beginner or more of a seasoned trader, will load up the charts pre-session, you'll get on and you'll start looking at price and you're saying, I don't even know what I'm looking at. One thing that I stress to my mentorship students is you need to have a process when you actually arrive at the charts. One of the first things I'm looking to do when I arrive at the chart is I'm looking at the date. I'm looking at, are we in a new month? Are we in a new week? Are we in a new day? Typically, you will be in a new day, right? This is one thing that I stress to all of my mentorship students is if you're on a new month, then the prior month's candle should have closed, right? So you've got new information, you've got solid information, which is actually printed in the chart and closed. So this can actually give you some really good information on potentially what the next month could do. Now, right now is Saturday, the 2nd of July. And as you can see, the charts aren't actually moving because the market is not open. Now we want to follow this process of looking at the monthly in every new month, looking at the weekly at every new week, and looking at the daily at every new day. I hear many people struggling with their daily bias, right? So the way that you build your daily bias is by understanding what the daily time frame is doing, because it's a daily bias, right? And the next things that are really going to help you are by going through the time frames, working out what your structure is saying, working out where your POIs are, working out what phase of the market you're in, and working out where liquidity is. Once you've done these 4 simple steps, this is actually what will build your narrative. This is how you build your narrative. And you might be saying, what does your narrative give you? Well, your narrative gives you the daily bias. Your narrative gives you the direction in which you want to be looking to trade. So what we'll do is I'll load up a fresh chart on GBP USD and we'll start looking at what the process actually looks like. So as I said, the first thing I want to be doing is going onto the monthly chart. I want to be working out what I'm looking at, what direction the market is going in the long term, and then I can start working out what's happening in the short term. So clearly what we can see here is we have a structural break to the downside. This would be our structural high because this is the area, well, this is the highest point in which price pushed to the downside and then broke this structure here, right? So that's my kind of monthly structure. That's absolutely fine. I'm happy with that. Looking at a little bit more relative price action, what we can see is this low has actually been swept here, and this was actually, March 2020. So we all know kind of what happened there. And this ultimately led price to, continue to the upside. But what you want to be analyzing is the fact that these equal highs right here failed to actually take out this previous high here, okay? So the fact that these highs here failed to take out this previous high would indicate to me that potentially we're coming down to take this low out. Now, I just want to make this very clear. This is not trade advice. This is pure speculation. This is looking at the long term and just analyzing the market for what it's showing us. If you choose to act on this, this is completely down to you. This is not my liability. My aim on this YouTube channel is not for me to be able to feed you. It's for me to teach you how to feed yourself. So please don't try and pick the easy way out. Trading is not easy. Trading is hard, okay? You're gonna have to put work in. You're gonna have to spend a lot of time on these charts, figuring out what is actually happening and build a logic around what makes sense for you. So because we're now into a new month, obviously we have a new week. So I wanna be then getting down to the weekly time frame and looking at what has the weekly done, okay? So the weekly, same again, we have started to push further to the downside again. We haven't quite taken out this monthly low here, which I believe that if we do take out that monthly low, then we will be coming down to target this previous low down here. Now, if we get down onto the daily chart, we can begin to see a little bit more information on what is actually happening on a day-to-day basis. Now, using that same logic that we just used, what we can see here is this high actually got taken out, and then ultimately what we've done is then ran down and taken this low out here. So this would indicate to me that structure on the daily time frame is bearish. And in the longer run, we want to be continuing with the daily trend. In between this gap that we can see here, we obviously took out this previous low, which is quite a major low, right? When we were running to the downside, we actually had quite a large displacement to the downside and actually breaking a major structural level. So as I taught you in the last video, what we can do is we can mark off this gap and then we can start dropping down through a lower time frame and identifying potentially where price could react from in this area if it is going to. Now, the first thing that my eyes are drawn to is this wick right here on the 15-minute time frame. Okay, so what we need to do is use our cursor, look to the left-hand side, and what we can see is we have a little bit of a range here, right? So we can use this range and we can say this could be our flip zone, and this would be an area in which I'm potentially interested to continue the trade. Now, getting down to the 15-minute time frame, what we can see is we do have this really nice up-close candle in exactly the same place that I just marked out that wick. So as you can see, price comes really, really nicely back up into this level, and then price ends up making its way further to the downside. I just wanted to quickly showcase to you what I taught you in the last video and the fact that it does happen over and over again. And if you do backtest it and you do figure out how it works for you, it can really help you out with your pre-market analysis to understand where price needs to go next. If you haven't watched the video, go check it out here. Personally, I use 3 different time frames for my main structure. I use the daily time frame, I use the 4-hour time frame, and I also use the 15-minute time frame. So what you really want to be doing prior to your session is working out these 3 time frames, right? So for me, that is my time frames. If you have 3 different time frames, or if you have 2 different time frames, you need to work those out first. Once you have your structural levels, you'll really have a good idea in where price could come back to in the form of a POI. And this is going to really minimize the range in which you think that you need to be looking at, right? Because if you're looking inside structure, you want to be following structure. So if you can find POIs inside of the structure which you've just marked out, then typically price will want to follow the structure that is creating. That's basically everything that I do for my pre-market process. I'm sure a lot of you are thinking, you need to do some rocket science before you get onto the chart. This is really not the case. You will have a much clearer understanding of the market if you can make things super simple for yourself. And make sure that you actually have a process written down, right? Doesn't matter whether it's on your computer, doesn't matter whether it's on a bit of paper. Just make sure it's written down. So every time you come to the chart, you know exactly what you're going to be doing first. I hope this video gave you a good insight into what my pre-market analysis looks like, what is the actual process that I follow religiously, and also how you can gain more confidence when you're coming to the chart. I hope you all have a great week. Take care in the market. Only take high probability trades, and I'll catch you guys in the next video.